Hey everybody, happy afternoon. It is Tuesday, March 18th. Pre-Fed day markets had a little bit of a slide, came right down to some market maker levels of 5,600 on SPX and pretty much chilled for the rest of the day. Worked out okay. Actually had a couple of winners today on SPX, which was nice. Hopefully a third one rolls in here at the end of close. Did a little broken wing butterfly on calls only for 40 cents. That should be closing up for profit by the end of the day. I wanted to discuss this. So just threw this together. This is essentially what the market is dealing with right now. We've got the Fed tomorrow with Powell's comments, FOMC. They're likely going to pause. It's a 99% probability the Fed does nothing. May, still a pause. June is what the CME Futures Fed Watch tool has for a first rate cut this year. Powell's comments will be, I think, important, obviously. But I think the looming deadline is April 2nd when Trump and administration announces what every country has as far as a tariff number. Couple things on that. I mean, I obviously don't know. I think there could be more uncertainty ahead for the stock market. But I'm wondering if the numbers are so outlandish, is this administration willing to watch a crash happen on its watch? Now, I say crash because what we're dealing with right now is a correction. Okay, markets have slid. You know, we had the S&P down 10 to 11%. So we'll go peak to trough. So let me go back to a slightly higher time frame. Let's go back to a 15-minute and zoom out. Hey, Paul, how are you? Good afternoon. Here is the market from all-time highs. So SPX from all-time highs, we had a correction of around 10.5%. Okay. So from the highs, 10.5% correction. It's really not a huge surprise that we're sitting right here at the 50% level off this little rally. So from this low Thursday to Friday into yesterday's high, the market is sitting right back in the middle around 50% coming into a Fed day. So tomorrow's Fed, I expect it to be very choppy. I don't know what Powell and Co. is going to say to necessarily boost the market. I don't think they're going to come out swinging with tons of dovishness. I think they'll just be explicit on, you know, how much they're watching the data, seeing things improve, seeing the resiliency of the economy, the consumer data. I mean, if they're reassuring, that's probably a good thing for the market to show that we're not going into full panic mode. But I don't think it's going to be enough to really move the needle into dramatically higher highs without having some more clarity. And I think this April 2nd tariff announcement is going to be more clarity. Good or bad, it's going to be clarity. So coming into tomorrow's FOMC, we have a gap up here to play with from today, and we have a gap here from Thursday, Friday last week. And we're sitting right in the middle. So, I mean, already I'm just wondering, based on this current structure with the Fed tomorrow, I'm not sure where it's going to allow me to position, but if I could do something where my sell side is positioned above this recent high and below this recent high, and all we have is a bunch of noise, I think that trade could be pretty good for tomorrow. But I don't know what we're going to get as far as IV and where things are going to be for my, you know, like the deltas I like to sell in the mornings. But that's what I'll be looking for. I would imagine price is going to be relatively calm before the Fed, and you know, then all of a sudden the market just kind of breaks loose, you know, during and after. So 2 p.m. is the FOMC. No rate cut, no rate hike. Everything's expected to be the same, but it's 2:30 to whatever with Powell's press conference. So you know, you can sit and listen to the press conference. I usually do in some capacity, or I just look at financial juice and look at headlines to see, you know, what is being said, what's being extracted, what are the, you know, what's being fed into the outlets of what Powell's comments are. So that's tomorrow. But I think if we just go to any major outlet here, just go news. Oh my God. Stimulus check update payment sent out might not be like, what are we doing? We're just going to send people money again? Is this not like straight out of the 2020 handbook and we don't expect inflation to come from that? Ugh, whatever. Let me see. I'm just looking for, I just saw the thing on tariff announcements. Pause rates. Yes, we know that. Fed day takes on new meaning. The stock market trends fixed by Trump. Stagflation basket soars. Stagflation pair index. Do I get a feeding for that? Stag Inflation. Nope. Goldman Sachs. All right. Actually, now that I'm here, there were a couple stocks I want to take a look at. 104 on target. Let me see what the IV is. This actually is an income trade that I've been watching for the last couple of days. I haven't taken anything yet, but if I like it, I'm going to look at it. So we're trading at a 42 IV. Fair market value on target is around 170. So Target, below estimated value, earnings forecast to grow, reliable dividend, good value, high level of debt. If interest rates are going down this year, that's going to be helping to service that. Insider selling, that's kind of been put into everything from the top to bottom. I'm pretty sure this is down over 50% right now. We're down 61% on target. Not that it means it can't fall lower, but depending on where, I could look at some ownership of target. I could look at some ratio spreads, take some ownership here back around like $80 to $85. Nothing on your Chris Pulver YouTube. Really? I'm live right now. Were you looking at my Discord? YouTube, we're live. So my Discord popped up at 3:05. On my YouTube channel, youtube.com/Chris Pulver, it's live right here. So I'm live. It's right here. So what was the link you're looking at? It's in my Discord channel under the YouTube channel. And I'm live on YouTube here. So let me know what you're looking at. Okay, target 104. Ownership level, if I was willing to take on the shares, I'd say anything around like $90 to $85 wouldn't be a terrible starting point. Dividend announcements, how many days should I go out? If I go out to the end of the year, probably get a decent amount of credit for this. I could go 80 by 75, 75 with 2 contracts. That way I would take ownership at 75 minus $5 minus the $1.76. That's a long ways out to make $176, but also a stock that I think could look pretty good. How much this was back in 2017. This is back in 08, 09 levels. I mean, is it possible that Target goes down 90%? One would hope not. This is also, ownership wise would be 70 and change. It'd be like a 90+% chance of profit on this trade. So question is, do I like it? That's $1.18 for a 91% probability of profit. Buying power is pretty cheap. I'd be willing to own some shares. Let me see here. So that's $1.76. That's $2.51. Difference though, as far as break even repair, I'd own it at 75 minus 5 minus $1.76, $68. So can I get something comparable without having to go out that far? Let me find out. So if I go out, let's say to summer, July, similar strikes. I go 85 by 75. So 80 by 75 here. Nope. Move this one up. Nope. That's not that exciting. So I think part of this is just because the IV rank is so low. I'm going to take this trade out to December. This will be a longer dated one. I'm going out all the way to December of 2025. And I'm going to go 80 by 75 and then sell 2 contracts at 75. This is $1. I should be able to get $1, hopefully 65 or $1.70 on this trade. I'm going to be willing to own the shares. So on the following accounts, I'm going to own at least 100 shares around $70. And all of these accounts are good to take it. So I'm going to start issuing the trade here. See, I'm going to get $1.74. Because it's a ratio spread, I might have to go a little bit lower, closer to the bid price, but I'll see what I can get for it. So let's try for a dollar, $1.74. Let's try it. Well, frick, that was easy. Okay, $1.74 easy. That is a tracker here. I'll get that posted. Target. We're going December 19 expiration. Buy the 80 put and sell the 75 put with 2 contracts, $1.74 credit. So it's an income trade as well as ownership price that I wouldn't really be upset about. I'd own it around $70. So 75 minus 5 and $1.74. I'd own it at 68.26. So if I took on any shares at 68.26, that would be about a 75% discount in target, which isn't bad. I could clearly go a lot closer to these current lows and see like, oh, it's going to hold right here. But, I'd rather take the income trade and own it at a price where the last time we had this big cluster was back in 2016 and 17. Plus, if we have the condition, this thing is like crazy overextended. I don't think Target's closing its doors. It's probably one of the, more fundamentally sound retailers out there. So why catch a falling knife? I mean, Pete, is it a falling knife? If it's 105 and I'm not going to take any ownership till $68, is that a falling knife? I mean, the reason it is dropping is because of the concern of the pullback of the consumer. So, I mean, if this was 70% on sale, I'm not saying it's great, but 70+% on sale with a retailer that fundamentally is trading at a price to earnings of 11 times, almost 12 times price to earnings. That's not terrible compared to its peers. Costco's way higher than that. Fair value 182 on a discounted cash flow model. Comparing this to a 53 times price to earnings with Costco, 36 times on Walmart, BJ's Wholesale at 27. I mean, Target is dirt cheap. So maybe cheaper. I mean, whatever, dude. I'm taking the trade. So you can do what you want. All right, I'm in. So that's one trade. Let me go other accounts. Filled at $1.74. I'm going to see if I can get a slightly bigger fill, $1.75. Nope. $1.74 though. Filled at $1.74. Interesting. Okay. 7634. Filled there. Filled there. Filled there. All right, trades in. Okay, so I'm just typing this up. Will it own shares of TGT if price is less than 75 by expiration? Break even is, if assigned, is 70, be what, 68.26? Yep, 68.26. Okay, build this one out. So this is Target, Apple. That one already closed out for profit. Let's go here for Target. Target to December. So I'm buying the 80 put and I'm selling the 75. There. So there's my ratio spread. If it stays where it is, keep the money. Falls a little bit, keep the money. Falls all the way down to my $80 or so. 80 down to 75 is a profit trap. I don't take on any risk unless this thing is less than 70 bucks. My break even 68.26. So if we stay above that at all, this is profitable. The assignment price would be 75. So anything below 75 is taking assignment, but at 75 is a nice little profit trap of the 5 plus the $1.74 that I pulled in. Okay, so that is the trade. And for the rest of the day, I'm just going to sit back and watch price do next to nothing. Let me see. I'm curious if there's like a pinning today that could be pretty good. So I have the broke wing butterfly. Here's a 0 DTE. If we pin this thing, how much credit can I get around 5620? It might just hang out at 5600. I'm not getting enough credit to justify the $13 a movement. But if we get back to 56, let's see. I'm just curious on this trade here. If I just sold it now, $16 and call side. So let's go 45. And what is that? $30 and 90. So $15. We've got about 14 to 15 bucks of wiggle room here. I'm just going to keep this trade up and running and see what this one does for the day. So if it trades around $14 and change, where's that profit trap at the end of the day? So I'll keep an eye on that one. Otherwise, for the remainder of this session, I do have a webinar at the top of the hour, so I'll wrap up just before 4 o'clock. I have a broke wing butterfly right here with a pin price. So if there's some late market rally that comes up and tries to fill this gap, then there's a butterfly trap waiting to happen here with a $5 trap between 57 or 56.70 and 56.75. I'd say unlikely. I'm guessing that this is here, right? So it's going to stay here most likely, and I'm just going to collect this 40 cents in the broke wing butterfly, and that's just going to be most likely a win today. Okay, no, it's a ratio spread. So that's why I'm collecting credit on it, because I'm buying one put and selling two puts. So it works as a bit of a profit trap. A ratio spread is like you saw. This is current price. Price can go down. This is my profit trap, and then there's my risk. So price right now in target is 104. This profit trap starts at $80. Peaks at 75 is like the ideal pin price, and my risk doesn't start until $68 and 26 cents or something like that. And this is my risk. So I pulled in $1.74. I have a $5 trap on top of that. So that's like the best case scenario. Likely scenario is I have about a 91% chance of profit on the trade, just to sit tight. And even this one, you're like, well, what about that 9%? I'm willing to own the shares and repair target. So that's my thought. If it goes down and it somehow gets into this 80, 75, I mean, let's say we drop all the way to $60. Well, my break even 68.26, I can wheel myself out of it with a couple of covered calls and repair it. Interesting lesson over the next maybe 30 days will be if I take some assignment this Friday on Tesla, which would be an assignment at 255, break even around 247. I'm just going to show, how powerful options can be. So I'm not really loving this assignment, but I'm willing to take it. I've got the capital for it. But we're at a pretty good support level. I'm not saying Tesla is perfect, and I'm certainly not saying this is the bottom. But I'm seeing some divergence on the 8-hour and daily time frame. We've hit some overextended conditions. If I go to Tesla, we did have a nice expansion move in this like 350 area. What I'd like to see on Tesla, if we do make some fresh lows, let me change the color here. If we do make some fresh lows, I'd like to see this momentum oscillator or this histogram start to show some divergence. This is another workspace for Tesla here. So on the daily chart, if I zoom in, okay, it's not perfect, but Tesla on a relative strength of a period 21, that is showing some slight hidden bullish divergence. This is showing some slight divergence between price and momentum. Again, obviously price can do whatever it needs to do, but if there is a near-term recovery on Tesla, I don't need much. My break even is around 247. If I take assignment, which means depending on what price does. I mean, if Tesla somehow pops up this week and gets above 255, there's no assignment. If somehow I can, it doesn't matter. I'm actually planning on having assignment this week, but I will be taking the trade. Here is Tesla. So the March 21st, this one. This trade at 255. Right now it's down $2,200. Okay, if I take the assignment at 247, within about 1 week, I could lower my cost basis by about $10 to $12. So I go from a 247 down to like a 235 break even. And I don't think it's going to be terribly difficult to get this thing to show some profit. I'm not trying to hold this thing for a monster gain. I've got some other trades that I want to manage and look through. But here's another one. Would I be willing to take 200 shares of Tesla? Yes, but I also want to be mindful that I'm going to take that with the intention of portfolio margin. So the buying power is pretty minimal. So if I take on 200 shares with a break even around let's say 240, I'll go 245 times 200 shares. I'm looking at tying up about $16,000 or $17,000 in portfolio margin, which buying power wise isn't a ton compared to what I have available. So this is only going to be on 3 or 4 of my accounts, but I will have some shares and be willing to take a little tranche that I could work with and play with. But the goal is I get assigned. I'm probably going to add in a collar trade, and that way if it gets called away, great. If it doesn't get called away, then I continue to repair it. I lower the cost basis and work through the price. Okay, so anyway, I'm watching. It does not look good for Tesla this week to come back and squeeze up to 255. If we look at this recent gap, 238 would fill this gap. We've got to get up to these highs, which are right around 252 from last week. So I mean, it's possible, but I would say unlikely at this point. I mean, if I go to the expiration for Friday, the expected move right now, with no major catalyst outside of the Fed, the expected move is getting this thing back up to about 240. So more than likely at 255, I'm going to take on some assignment, unless there's some sneaky news that's coming out that nobody knows yet. So anyway, but I'll know it, I'll track it, I'll keep the break even, and hopefully repair it for. I'd like to repair it if I'm going to own the shares. I'd like to repair it for anywhere between $500 to $1,000 per account. That would be the plan. Okay, let's go a little bit more top down. So S&P's down 1% today, mostly with a gap. I mean, price itself was not super exciting outside of a gap lower. So gap lower, slid right back, and this is what we said earlier. This is nothing more than a 50% pullback from where the market started this little rally. So if you take a fib from this Thursday low and stretch this up here, right there, we're sitting right at the 50% zone. So this low, this high, right in the middle. And Fibonacci is 50% is not a Fibonacci, but 50% is a equilibrium. So it's not a surprise that we sat here and stayed here. So anybody that's in my daily profit play service, when things settled in, we had to wait a little bit longer for trade number one. Took a second trade when this thing started to calm down, and just had the confidence to say, I don't think this market's going to do much, pre-Fed, and that's exactly what we've done for the rest of the day. Is just stay kind of right around that 5600 zone. That's been the handle all day. So, all right. Um, Going back to this really quickly, Trump versus Powell. Big announcement, I guess, on April 2nd about what countries and what percentage of tariffs we're looking at. So this is about retaliation tariffs. Does it continue to escalate? I think that, again, like, I don't know, but on the indexes, I know that nothing about Trump nor the administration is saying that they're worried about stock prices, that they're not paying attention to stock prices. Okay, I hear them, but I will say that if they allow this to happen, we're going to go into recession. This is enough damage done on on Wall Street. It's going to crush where everyone is hoping that things stay resilient. Right now, most consumers are resilient because they do have all-time highs in their portfolio and they're just taking a little bit of heat right now. Okay. And also they have household wealth because on paper, their homes are probably worth 2 times more or whatever that they've been since COVID because house prices are stupid right now. But if you sacrifice one of those things, i.e., stock market crashes or house prices crashes, you're going to send Main Street and Wall Street into a bear market / recession. And I understand that in the classic, elasticity of the market, we can have this correction and then this crazy supply side can come out. And this is about the Fed put and the Trump put area that I'd be watching. But it's going to be so much pain. It's like, would we have like a COVID type move where it's kind of self-induced and it's this tariff tantrum and the market hates it? Or is it like earnings compression that is now being priced in and there's more to come because tariffs continue to get worse and it creates more uncertainty? I mean, I think that's the bigger picture. The bigger like shooter drop is going to be if tariffs continue to escalate, then earnings compression in the S&P is going to continue to be revised lower. And that is where we get into the stagflation talk. Okay. But I really do think that there is a Fed put / Trump put somewhere in this market. I think if the current administration is wise, they probably wouldn't let this market go too much lower than maybe flushing down to this level, but then coming back up. Because like I said, legitimately, I would be concerned that this would send the entire economy into a panic. This open space, I know it gets a little bit nastier, but I mean, you never know. Right? Prices are prices. This is all funny money. This is just a game. But you're playing with people's livelihoods. You're playing with their 401ks. You're playing with their retirement plans. You're playing with their savings and investments. This has been like the best thing for most consumers since 2020. Is the investment markets have been at all-time highs outside of surviving 2022. But if you bought through 2020, bought through 2021, bought through 2022 and survived it, 2023, 2024 produced lots of all-time highs. 2025, so far a different story. I do think a correction was needed. We got it. So now it's a matter of how tight is this correction going to be? How quick can the bulls kind of pick themselves up and figure out how to stabilize versus letting the bears get the upper hand? Does that make sense? So I mean, I do think that there is a level in here somewhere that the market is going to respond to. My biggest concern is that it is back down here towards 2021, 2022 all-time highs and possibly testing this, which has been a really solid moving average, by the way. This is a yearly trend line with a 5-period moving average. So, do we test it back in 2011? Yes. When's the last time we were actually, sustainably below it? It would have been during the great financial crisis. So is that what we're going to deal with? I don't think so. I don't know. But since 2011, lots of support. 2016, when we finally had a range trade for 20%, lots of support. Even with Volmageddon in 2018, lots of support. Through COVID and back above, lots of support. Through 2022's bear market, literally came back to test it. That was the bottom. You talk about a way to time a bear market. Like that bear market, yes, it came in waves, but when it tested that yearly moving average, price went back up. Okay, so here we are again. And I don't want to have to plan for that to be the trade, but I am prepared for it. I have hedges in August, September, and December for that exact move, just in case. It is a just in case play. But if this market figures out that, okay, we have a correction, we fight our way back, these adjustments are getting revised lower. So the 6,500 target of the S&P, the 6,600 target of the S&P, all getting revised lower, pretty much back to the highs. So basically, and they're none of them are right. Goldman Sachs revised from 65 down to 62. I don't know if it was RBS or RBC, whatever. Royal Bank of Canada, RBC. They revised down from 66 to 62. Okay, so the market's looking at like we'll just get back to all-time highs. Okay, so what does that mean? Does that mean that we have a 10 to 15% drawdown first? Do we have a 20% drawdown that we get back up to a 25% rally to get back to the highs again? Maybe. So just saying. This is all the crazy stuff that we have to wonder. I think the current administration, based on these April 2nd tariff talks and tariff announcements, I think if they are wise, then they wouldn't let the market drop too much lower than maybe a bear trap, and then the bulls can come back in. So the combination of the Fed this week, I don't think the Fed is going to be a big event. I think it might end up being like a big nothing burger because the market may be paying way more attention to tariff announcements. That's where all the uncertainty lies. The Fed is transparent. The Fed is way more giving when it comes to here's what we plan to do. But tariffs and the current government, current administration, they're not giving us anything. These negotiations are played close to the vest. The talks are hard, and we're seeing countries that are. I mean, I think the U.S. has like a strong bargaining chip, but all it is creating all this potential uncertainty. And again, if we have uncertainty on top of earnings compression, on top of earning revisions lower, that's not a good sign. And if you do that with a Fed that is still pausing right now, that can send the market a lot lower. That can send the market into like an unhappy phase, right? It's already bad enough, dealing with a 10 to 11% correction. But my concern is that this April, August low breaks, and then there's nothing really stopping it, right? If we come into this area, unless this thing snaps back with a bear trap and snaps back aggressively, this is open space. And this is not really support. This is not really support. This would be that 200 moving average is now resistance. So it really is going to be a kind of an epic, maybe 30 to 60 days to figure out like how much more pain is the tariff talk and the current administration going to bring before this market can figure out like, okay, more clarity, more certainty, and maybe again, that's April 2nd. We'll find out. But I applaud the current administration for acting fast. I think that this correction needed to happen. It's interesting how it did happen on what the catalyst was. But I'm not really a huge fan of just now they're letting the market linger and wonder, and that's never a good thing because when the order flows really start to pile up, this little rally we saw from Friday to Monday was a very thin volume rally. So again, the sideline money has not come back into the market, and that sideline money might be putting in more of the dump, or that sideline money might be waiting for more clarity to get bullish. But that's probably trillions of dollars that are just sitting and waiting. But there were pretty good volume here with a deleveraging. Okay, your reverse tariffs on USA. I know that's the big uncertainty is like if the Euro US trade war / tariff war continues to go tit for tat, then yeah, I think it sends it lower. I don't think the current administration minds seeing the dollar go lower. I think this actually helps business, but driving it lower. Here's the hard part. The dollar index is making some fresh lows again today, but what is not really budging is this US 10-year. So the immediate plan for this market to correct was to bring this 10-year lower, and it did. We went from 4.8 down to about 4.1, but now we settle back in around 4.3. And I'm wondering if the 10-year is kind of digging its heels in because globally, broad market yields are up. Like Japanese yields are up, China yields are up, Euro bonds are up. And when yields are going higher globally, it's going to be sticky across the board. So we could have a dump in the dollar, we could have down in the stock market, and we could have a 10-year that doesn't freaking budge. That's not going to solve anything, right? You're still going to have a pseudo frozen housing market. You're going to have a ticking refi bomb at the probably second half of this year. I would say September to December looks really rough for potentially refis. If we're not any better and people are refining between like 6 and 7%, corporate refis maybe even higher than that, that's going to be a brutal window when this group that is wanting to have more cash to work with was probably refining at like a 1 to 3% window. And now you're talking about raising more capital at a much more expensive clip. So there's a lot going on. And that's why this look, it's going to be a challenging year. That's what I think. And I said this last year, it's going to be a trader's year. That's what it feels like. That's what it is thus far. And, I'm going to try to grind through it. Whatever happens, I'll figure it out. But I'm, trying to keep a bunch of cash at the ready. So I've still got plenty of cash. My account's about 1/3 in cash right now, which I'm okay with. The more the merrier, and I'll continue to play defense. I'm taking a lot of income trades and profits. So I've got a handful of things that I still want to be accomplishing this week. Pfizer diagonal, I need to still take some action on those when they expire on Friday. I did a trade here on QQQ. Let me check something here. So QQQ at 474. Let me jump into my Thinkorswim web platform. This one's got to be looking better. Okay, this is out to the 31st end of the quarter. So if QQQ stays above 450, then I've got a little profit trap running. Yeah. So I've just got some expirations in the next few weeks that are going to be pretty important to watch. SPY trade, same thing. This one for Friday, this looks pretty good. 540 by 510. Currently, let me check and see what this one's looking for. So 1, 2, 3, 4 positions. Took this trade in for about $1, and right now it is trading for. See if I'm closing this out for a small debit. Okay, this trade should be good. 540 by Friday. 540 by Friday, that'd have to be a fresh low. Is the Fed going to drive this market into a fresh low? That's 55. Let me go SPY. Our low was 549. 540 in the next, obviously anything could happen, but 540 would be, the Fed would have to say something pretty bad to get another 3% drop. It can happen. I have a feeling a lot of the sticky that trade is because we still have FOMC and this like swelled and kind of permanent implied volatility until the Fed is done, and then the market will kind of let things neutralize again. So let me go back to my positions here. I'm showing up. Max profit is $97. I'm up $90 right now per contract. I think I'm just going to go ahead and take the profit. Keep the buying power. Not a bad trade. Take a look at this one. So this is a SPY trade. Let me double check all my SPYs really quickly. March 31st. This one looking good for profit. This one I'm still going to wait for. Hedges in. All right, I'm going to take some profit on this one for March 31st. Max profit's $1.32. I've got a nice little profit target in this one. I probably don't have to do much to it, but $1.32, which maxes out around $600, I've got $400 of profit right now. I can just take the profit off, and I'm going to go ahead and do that. So $1.32 is now showing for a credit of so let me see if I get 265 out of this one, 270 maybe. Ooh, that'd be pretty sweet. So 270 not filling, try 265. Try 260. This is all bonus credit, by the way. 260 just got filled. Good. Okay, let me check this SPY position here. This one, same thing. Up a good chunk of profit. Close. Try the 265. 260. This one filled at 260. 259. 258. Okay, so the nice thing is this trade was taken for $1.30. So taken for $1.30 and closed out for $2.58. So together, that's a $388 winner per contract. I'll take it. That's a little bonus trap. Got a couple of these running. This one here. Close. 258 was filled last time. So you get 258. 258 got filled. Very nice. SPY. It's fine on that one. This one's okay. This one's okay. This one's okay. 1, 2, 3. Close. Let's get 262 if we can. 260, just below the mid price. Okay, 258, we'll try that. 258 got filled. Good. So that's a winner on SPY. So $1.30 plus 258. Nice little bonus trade there. That one's out to April. This one just has some shares. This one is out to April. And this one is okay. I'm gonna watch this one for Friday. This one's okay. I'm gonna close out this trade here. This one's up about $70. Close this one out for profit. Yeah, if I close this one out, I'm gonna close this one on Thinkorswim as well. So this one's up $70 out of the 87. It's gonna take it. See if I can get 18 cents out of this one. 19 cents just got filled. 1, 2, 3, 4. Close selected for about 19 cents. Filled. All right, cool. So that's a little profit there. And the other position is important to watch. If we stay above 560, that would be a good thing, which is at current price. So if the Fed offers up any type of rally, then this one's looking good for a little winner. So I'm going to hang on to this one. I do have a profit trap. Stay above 560 that I can grab maybe $1.48 or so by Friday. So watch that one pretty carefully. Okay, so staying above 560 would be pretty solid. We'll see. We have the market. It can play between both gaps. And it honestly wouldn't surprise me if it goes both ways. It could be just a total train wreck tomorrow, just noise, just a bunch of noise. I think that the market's probably going to care more about tariff stuff than it will for the Fed. The Fed's not going to do anything. This is the watch tool. Nothing has changed. Here's the current probabilities. 99, even for May, the Fed's likely going to pause. This may change. Let me take another screenshot of this just a comparison. So I'll take a screenshot here. And this is pre-Fed. So we have March 18, 2025 at 3:49 p.m. This is pre-FOMC. All right, so come back and reference this after the Fed, see what the market looks like on Friday near the close, if any of these probabilities have changed. So if the Fed can offer the market some reassurance, that's probably not a bad thing. If the Fed cannot offer the market reassurance, then okay, then it could be, as we should have. It's like plan for the best, prepare for the worst. I don't think that the market is done with the lows yet. I think the market still has a lot of uncertainty. If the Fed is not given any type of assurance of being accommodative, the market may not love it. The market probably still won't move a lot, even with the Fed news, because I think tariffs are going to overshadow the significance. Fed right now, they're not doing anything. Fed even the next, 3 to 6 months, maybe cutting rates once or twice, maybe 2 to 3 times by the end of the year. I mean, if they're cutting rates in a plummeting market, who cares? All it's going to do is help alleviate, but the market's going into like a tailspin. So we'll see if the Fed's going to remain firm on their stance of employment, inflation, seeing that they're light at the end of the tunnel, and they're looking to cut rates, and these are whatever. It's going to be all famous two-sided vague commentary. That's what he's always really good at. Okay, let me check one thing really quickly. That one closed for profit already. That one closed for profit already. I just want to make sure all my 321s closed out for profit. They did. Okay. So the only expiration I really have on my waterfall service is 328 is my nearest one, and then the rest are all in April. So it's going to be like crunch time. 550 is the key level for me on XSP, which is pretty much at the lows. So XSP, the lows we had, it was 550.85. So we didn't technically strike the lows, but if the market were to come down and test the low but be a bear trap, that would be a good spot to bounce. And our XSP trade for the 328 expiration looks pretty good. A key level on SPX is 55.65. If that offers up another bouncing opportunity, then obviously the more clear it gets, I still think 5,800 is doable. I think between 57.50 and 5,800 is doable to the upside for at least a correction and a little bit of a relief rally. So that should help us get pretty clear through the end of the month. Also, the monthly candle for March is not too awesome. If you take a look at monthly candles, March has a little bit of a wick to the downside from that rally last week on Friday and then Monday, but that is it. So do we finish the month, at the lows, or do we finish the month with some type of buying interest to get this wick a little bit longer? Right? Like if the bulls can eat into this a little bit more, thin out this red body, and it's just a long wick, then obviously it's a very crazy month. And from this high to this low, the market's kind of right back in the middle again. And we'll see how that plays out. So I just think it's potentially going to be like a big old fight through the first half of the year. And maybe it doesn't take that long. Maybe this clarity from April 2nd is going to give the market a chance to run. Perhaps the seasonality. Where's my there? Perhaps the seasonality just starts to pick up a little bit, right? We find some stability here in March, and then March into April, May, we have a nice little run. I think it's crunch time. April, May, June, that's probably the best window from every election year or post-election year since 1950. That's the best seasonal pattern because summertime by July, you get a bit of a dip. So when it's a post-election year after the incumbent party loses, you typically have some summer drama. If it's the all election years, it kind of smooths things out. But we're looking more compared to the red line and the blue line. So if we're going to see any type of pickup, timing is hopefully now or very soon. Make sense? All right. I have a webinar coming up in just a couple minutes. Everything's looking pretty good for SPX end of day. That trade's still good. March 28th is my nearest expiration. That's a 550 strike. Still need to wait this one out a little bit. Also the 31st, 550 strike. So these two trades, March 28th and March 31st, crunch time at that 550 mark. So if it does poke it again, hopefully it's a bear trap and the market can go back and stay above it. That would be a nice little way to close out for some bonus profit here on both of those trades. And we'll start hopefully knocking these down like one at a time. The trade for the remainder of the day that I'm watching is right here, SPX. It's just a broken wing butterfly. It's up 40 bucks. That's my $40 credit. I'm just going to let it expire, and that will be good. So I'll add that to the list today. That is, I think it's 3 for 3. Yeah, 3 for 3 on daily profit play. We have ourselves a hot little streak going on daily profit play right now. Daily profit play is, I think, 27 for 28 in these last few weeks. Let me double check that here. Yep, 27 for 28. So not too shabby. Throw that in my Telegram. And at the top of the hour, if you'd like to join my Telegram channel, I do have a webinar at the top of the hour. This is a service that I run. I put in a trade today that's good for today and tomorrow. And that trade, so far, we are 22 of 26 with our winning rate. Not a bad chunk. So 22 winners out of 26 trades total, 84.6% winners. And not bad. I put in a trade today on ticker PDD. That's in your tracker. That's in your alerts. Members should have gotten that today. So I'm doing a webinar on that at 4 p.m. if you're interested to check it out. I'm going to put this in here for my little hot streak on daily profit play. Good. Okay, am I still bullish on Netflix? Yeah, but not until I get a dip. I mean, I want Netflix to find this 200 moving average. I've got a trade this week that expires for full profit. Netflix should be good by. That is a broken wing butterfly that I'm looking to hang on to for. I've been in the trade for 7 days. I'll take a look at this one, but I should be able to get most of the profit out of this one. But looking for an April 17. I mean, this thing would have to come back to all-time highs again, and I've got a profit trap kind of waiting for it. So if we just sputter, I mean, I think we still have to find the 200 moving average. So having it flush down, this is like kind of textbook resistance. So I think Netflix in the short term probably heads lower, finds the 200 moving average, and this is what I'm looking for. If Netflix comes down to this area, then I'll probably start looking at opportunities to get long. I mean, I think it's officially like the king of streaming. They're doing more with live sports. They're content machines, whether you like it or not. But the only spot I'd be considering, like, okay, 200 moving average to potentially this gap down here. And I will be careful on my option trades because I don't really love owning 100 shares at $800 or $700. I think that's a little pricey. But a break-even price of $500 or less, I'll see if I can position for some type of income trades, because that to me is a little bit more reasonable. Otherwise, if we come down to a level that looks attractive, I'll throw $1,000 at it. And if it comes down to this gap, I'll throw another $1,000 at it. If it comes down a little bit lower, I'll wait for a trend line and I'll start to take on some bites and nibbles. Probably down here at the $500 mark, where this thing is, ballistic to the upside. We come back to around a 50% pullback. I'll probably put 2K on it. Like, I don't mind putting like a $3,000 to $5,000 investment on Netflix. And if we get a run like so, what's that return? Now, let's say we come back down to about $500. Well, that's 100+% upside. So whatever I'm willing to put into it, I think longer term we get there. So anyway, but right now, no, I'm not bullish on Netflix unless we come back and find some better levels to the downside. Okay. All right. I've got to jump into this webinar. If you're in my Telegram channel, it is in the Chris Pulver Telegram. The link is right here, pressbirdipub.com/breaking news notice. I'm going to hop in there and jump in, do that webinar, and we'll be back tomorrow. Tomorrow's going to be a busy day. You're going to see on my Telegram channel, there's going to be, if you want to join a roundtable, I will be able to post a link, I think, for the roundtable in the morning. It's 11:30 a.m. So I'll be live at Daily Profit Play, live on YouTube around 10:15. Roundtable is going to be at 11:30 a.m. And then I will be live probably for FOMC around 1:30 to 2 p.m. Eastern time to see how it all unfolds and take that into the close. And I think that's what I have lined up for tomorrow. Yes. Yep. Okay. So busy day, lots of stuff to watch. As always, lots of juggling parts. Still have to get to my to-do list for the rest of the week. And I'll be about, I don't know, 20 positions I need to look at. And where are we at today? Just playing defense, watching things. Tesla was a big contributor to my red today. Just because the stock is down, I've got some options exposure. The prices are changing, so that's really where this red is. But it doesn't make it fun. So I will look to, like I said, I might take some ownership on Tesla this week, and I'll look to repair it. That is going to be the plan, hopefully. Repair it quickly. 500 to 1,000 bucks will be good. A lot of that could be done by a high premium covered call. I might do something in the money and just try to get myself out with a little bit of profit. I can also roll it week to week. So I'll finesse. So, all right, I'll let you go. If you want to jump in that 4 o'clock webinar, you're more than welcome. That is prosperitypub.com/breaking news notice, or you can jump in and use the link in my Telegram. Okay, I'll see you tomorrow. Thanks. Bye.